Macro market trends, stock selection, ETFs, options. Just some of the topics covered in Cook's Kitchen. While market players are waiting for the Fiscal Cliff negotiations to get rolling, they're not standing still. And our technical trader Kevin Cook explains what that is all about as he joins us now. So Kevin, in your morning Profit from the Pros note today, November the 14th, you said that smart money is selling. How do you know?
Yeah, well, that's we throw the phrase around a lot, smart money. In a more conventional sense, we talk about institutional investors, and some of them being the smart money, or at least the big money, right? Mm-hmm. So we can't know for sure, but I often look at the charts for clues. Right. On an individual stock, you can look at volume bursts, right, as signs of institutions stepping in, and you can look at at SEC filings that they have to make. But for the market as a whole, you really just kind of have to read the market and sentiment, and that's what I've been trying to do here. So what we've had, we had this big breakdown after the election last week, and the market just kind of sat on its 200-day moving average, and we'd make these rallies up to 1390 on the S&P, which has been a key level for me, and they sell it every time. Yesterday was no exception, and I decided to get a little more cautious and add some hedging and bearish positions yesterday for market timer. And this is where we're going. The market taking out lots of lows now. 1375 yesterday was the lowest close since August 2nd at 1365. Now we're below 1370, pushing 1365, and that's the environment we're in. Here's the S&P with Bollinger Bands. You can see losing the 200-day moving average here. And I've said for a week here that the 200-day moving average is not as important as people think. What's important is the damage we did falling through 1425, which was the breakout level to new highs, and then 1400, where we sat for a month before the big QE blast by the ECB and the Fed. So we've lost 1400, 1425. Rallies up to there, I was ready to sell. You didn't even get the chance. So that's what tells me smart money's distributing stocks here. And just, even if we have to wait till Friday for Obama and Boehner to meet, right?
Yeah, right.
Let's say great things happen. I still don't think we get a huge bounce. I mean, there's not going to be the so-called grand bargain that we're going to get on Friday that's going to send us higher. So in the meantime, the path of least resistance is lower. Let's look at it on the Russell 2000 too. It's definitely been the weaker index, and just falling apart here. Trading below probably 780 by now as we're talking, and you can see how markets are sliding down those volatility bands.
Yeah. Well, what about Europe too? I mean, you've got a lot of festering issues with Greece and Spain, not to mention new labor protests.
Yeah. So with Greece, still juggling that, but our U.S. markets are not hostage to Greece anymore. They're hostage to Washington. And the Spain thing, will they or won't they? Will Rajoy ask for a bailout or not? Pretty much the same thing. Riots in the streets, not surprising. A lot of people have been predicting that to happen for a while. So really, we're still hostage to Washington as the bigger picture. Let me look at the VIX here as a measure of volatility. Still pretty tame, and there's sort of a disconnect there, but I think we're due for a volatility spike.
Does that surprise you?
It does a little bit, yeah. And it either means that bigger market players did so much hedging in advance of the election. Really, selling the S&P futures, buying puts above S&P 1400, right, that they've got their hedges in place now, and they've just been selling stock since. But I said yesterday, we're due for a volatility pop. We're sort of getting one today. It'll be interesting to see how far that goes. And I looked at some of these volatility instruments like the TVIX and that. The thing's trading for $1.30. These and the VXX and the UVXY, all these things just continue to get crushed because if they're using futures to create their leverage on the VIX, they just get hurt by either backwardation or having to roll. And so those are products people definitely want to stay away from unless they're very familiar with how they trade. Let's look at, this is from Marty Chenard of StockTiming.com. This is a chart he published as of Friday's close. And this is something he looks at quite often. This is a ratio of very strong stocks to very weak stocks. And you can see what's happened here. The the strong stocks are falling apart. And we see that all around us with whether it's Apple or IBM or Google, Exxon, Chevron, and you take those generals experiencing distribution, and it really hurts the whole market.
You mentioned Apple again, so I'm guessing you're still looking at Apple. Any investing lessons to be learned from the fall?
I think
there?
there's, let's take a look at the Apple chart here. I think there's a lot of lessons to be learned here, myself included. I lost a good amount of money in my own personal trading, trying to buy December options and January options here. And I think that the big lesson here is that you, with a stock with the largest market cap ever, and very loved, also very overowned. So when you had this meltdown, you had a situation where who's left to buy it? All the institutions already own it, and you've got earnings issues. Meaning, yeah, it's still, the company's going to probably bank $50 billion in revenues in this holiday quarter, but the expectations were pretty high that you could buy it at 12 or 13 times earnings and hope to make your money if it went to 14 times earnings. Well, there's been a big growth recalibration there. And so estimates for this December holiday quarter is the first quarter of fiscal year 2013 for Apple, and estimates came down from $54 down well below 50. And so that's what's getting priced in. Competition issues, supply issues, Tim Cook issues, design, coolness issues. And so the hype, certainly created a bubble. Well, the bubble is bursting. Now, does it mean that Apple won't go back to 600 in the next few months? I don't know. I think it could, but there's still a lot of pain and very few players left to buy it when everyone owns it. So Doug Cass had that one right. His rule was never buy a tech stock with declining margins that is also overowned, and that's the environment we're in. So it looks like we're setting up for one more capitulation flush down to 520, maybe even 500 on this stock, where I still think it would be a great long-term buy.
All right. Well, I know if there's any updating on Apple, you'll be the one to bring it to us. Check out Kevin's columns on Zacks.com, Cook's Kitchen, and you can also join in the conversation with him on Zacks Real-Time Insight. Get some interesting conversations going there with him, so you might want to be a part of that. Go to Zacks.com to check it all out if you're not there already. With Kevin, I'm Terry Ruffalo.